Three.
Good morning, learners. Welcome to our lesson. My name is Teacher Mwangi. I'm doing agriculture form 4. And our topic today is farm accounts. Farm accounts, which is part of the agricultural economics in form 4. So today we are going to define what is farm accounts. In farm accounting, we refer farm accounting to as the art of recording, classifying, and summarizing financial transactions of a farm in such a way that meaningful interpretations can be made from the recorded information. So farm accounting refers to the art of recording, very important, recording. After recording, you classify that information, and then the classified information is summarized in such a way that the financial transactions of a farm will end up making some meaningful interpretations. So learn, we are going also to look at the importance of keeping farm accounts. So, importance of keeping farm accounts. Well-kept financial records will help the farmer to, number one, to secure loans. Well-kept financial records help the farmer to secure loans. This one, in this case, you'll find that when a farmer wants to secure a loan from a bank, the bank will come and assess the record so that they can see that whether the farm is making a profit or a loss. And if the farm is making a profit, then the farmer will be in a better position to secure that loan. But if the farmer from the records, it happens that the farmer has no records, then there is no evidence whether we have any profit or loss taking place in that farm. And in that case, the farmer will not be in a position to secure that loan. Number two, we are well-kept financial records will also help the farmer to make sound management decisions. Will help the farmer to make sound management decisions. And from the records, for instance, if a farmer finds that in one of the enterprises, like for instance, dairy enterprise, if from the records the farmer finds that most of the profits are coming from that dairy enterprise, you'll find that when it comes to decision making, the major decisions will affect that dairy. And if, for instance, we have another input like poultry, and this poultry maybe we don't have good profits coming from poultry, you'll find that when the farmer is making decisions, then he will opt to maybe put aside that poultry and go for another enterprise which from the records is bringing or is adding value to the farm. Number three, well-kept financial records will also help the farmer to determine whether the farm is making profit or loss. From the records, you'll find that, like we said, that the farm accounting is the art of recording, classifying, and summarizing financial transactions. Then it means that in any enterprise in the farm, from the records, you'll find that if the inputs or the cost of production is such that after setting the outputs, you find that the cost of the inputs is so high compared to the cost of outputs, then it means that the farm is operating at a loss. And that way, the farmer from the record will be able to know whether he's making a profit or loss, which in other words, if he didn't have very good records, maybe the farmer could continue operating at a loss, which would eventually lead to the closure of the business. Number four, these farm accounts will help the farmer to prepare farm budgets. Budgeting, remember that proper budgeting, this one includes proper planning. And in farm budgets, you have like the long-term budgets for maybe for a period of a year. And then you also have partial budgets, which are those budgets which maybe will only affect only one part of the enterprise. Or maybe they are short-term budgets. So from good farm accounts, then the farmer will be able to prepare his or her farm budget. Then another importance, number five, of keeping farm accounts, we have it helps to evaluate assets and liabilities. it helps to evaluate assets and liabilities. Assets, these are all those things which are owned by the farmer in the farm, which include things like the tractor, farm structures, farm buildings, and so on and so on and so forth. Then liabilities, this one, you'll find that liabilities are things like bank loans or any other money that is supposed to be paid to outside the farm. So that's what we refer to as liabilities. So from a good or from a well-kept farm account, the farmer or the farm will be able to evaluate his assets and the liabilities. Then we proceed to importance number 6. Farm accounts will help in assessing chargeable tax. Remember, a good farmer is always responsible to his or her government, and that way you find that a farmer will always be in a position to pay his tax at the end of the year. And from well-kept financial records, then the farmer will be in a position to be taxed fairly. He will be in a position to charge fairly. He will not be overtaxed or undertaxed. So, Lana, then we proceed with also with financial documents. So, in farm accounting, we have what we call financial documents. And financial documents, this one referred to as financial information in the farm is kept in the following financial documents. And these financial documents, number 1, we have the invoice. Now, the invoice. Number 2, we have statements, and under statements, we have 2 examples of statements. We have statements of accounts, and again, we have bank statements. See, another example of financial document, we have the receipt, followed by the delivery note, and then we have the purchase order. So we are going to look at, we will begin looking at the invoice. So we will start by looking at the invoice. So what is an invoice? We start by defining what an invoice is. An invoice, this is a document issued by a seller to a buyer when goods are bought or services rendered on credit. So an invoice is a document which is issued by a seller to a buyer when the goods are bought or services rendered on credit. Invoice contains the following details. We have number 1, it contains the date of transaction. Number 1, we have the date of transaction. Number 2, it contains the types of goods which are bought. Whereby we are going to indicate them on this column over here. For example, we are going to look at, for instance, this farmer is going to buy dairy milk. We need to have our dairy milk. We need to have our dairy milk over here. We need to have our dairy milk on particulars. Then we can have this dairy milk. Maybe he bought 200 kgs of dairy milk. Then still under particulars, types of goods which are bought, we can have something else like the farmer also bought diammonium phosphate fertilizer. Maybe he bought 2 bags, 50 kgs each. Then number 3, under the invoice, it contains quantity of goods which are bought. Like we have the quantity. So when we say we have the type of good, then on this column here we have the quantity of goods which are bought. Then number 4, under the invoice, it contains the price per unit of these goods. It is the prices of the individual particulars. We have them on this other column. So dairy milk, for instance, 200 kgs, maybe both them at, so this one denotes each. So maybe the bags you bought at, each of the bag, each costed, for instance, 2,000 Kenya shillings. Maybe your fertilizer you bought at 3,000 Kenya shillings and 00 cents. Then you also have the total cost of goods which are bought. Total cost of goods which are bought, which we have over here. So at each, for instance, here we have now, because we have 2,000 and then we have 200 bags, then it means that every bag costed how much? So we are going to divide 2,000 divided by 200 so that we can find the cost of each bag. So here again, this is the total. If you need to find each of these, you're going to divide the 3,000 divided by 2 bags, which cost 3,000 each. Or that is the total of each. Then you have the total cost of goods bought on that column, and the date payment which is expected. Something else also on the invoice, it addresses this invoice is being sent to who or it's coming from where. So for instance, we have this invoice which has been prepared after delivery was made in our school, Anesta Victory. So we can have Anesta Victory Boys in the school farm, Anesta Victory Boys farm. The invoice is addressed from where? So maybe we have been supplied the goods on credit by the stores around here. Maybe we can have Wakulima stores in Nakuru town. Wakulima stores. So two is where the invoice is. This invoice is addressed to Anesta Victory Boys and it has been sent by Wakulima stores, indicating. Then here we are going to have the totals. Maybe this farm, our school, is supposed to pay 6,000. It owes this 6,000 to Wakulima stores. So this one, as the goods are being delivered to the school, they will be accompanied by an invoice. Then the farm, after getting the invoice, then it will prepare another document so that it can make the payments. Number two, we are going to look at statements. And like we said, we have two statement examples. We have two examples of statements. Statements of accounts, and then we have bank statements. So statements, you have two examples of statements. We have statements of accounts, and then you have the bank statement. So statements of account. A statement of account is a document sent to the buyer by the seller as a reminder to inform him or her what he or she owes the seller. It is usually written at the end of the month. A bank statement, on the other hand, is a financial document sent by the bank to the farmer on a monthly basis to show the position of the bank account by the end of the month. So we have statements of account and bank statements. So statement of account, this one, as you have said, is sent to the buyer by the seller as a reminder to inform him or he or she what he or she owes the seller. Then a bank statement, we have said it is a financial document sent by the bank to the farmer on a monthly basis to show the position of the bank account by the end of the month. So in case the farmer had sold his dairy products, maize, and what have you, all the money in the bank, all that cash in the bank will fall under the bank statement. So this statement will be sent by the bank to the farmer, showing that the farmer owes this amount of money in the bank, and it is sent at the end of every month. So we proceed to receipt. Number three, receipt. 3. So we look at the receipt. A receipt, this is a document issued when payments of goods or services are made, and it contains the following. You have said the receipt. This is a document issued when payments for goods or services are made. So when we have goods which are bought, maybe they are bought in cash, then this is the document which the buyer is given by the seller. And receipt contains the following. It contains the date of payment, when the payment was made, the amount, we are going to have the amount indicated over here. So it contains the amount which was paid in Kenya shillings. It also contains goods and services for which the payment is made, received from, being payment of. Then it also has the farm's letterhead. This is the farm's letterhead. Wakulima stores, and it also contains the address, the PO Box 40 Nakuru, telephone 020-450. So that is the letterhead. It also contains the receipt number. It also contains the receipt number, which can it can be somewhere on the, maybe we have the receipt number over here, maybe 2051. That is the receipt number or a serial number. It also contains, it indicates for the form in which the payment is done, whether it was made in form of cash or in form of a check. So we are going to relate to our previous example, whereby we had written an invoice, where our Prima stores had written an invoice to us, whereby they wanted us to be informed of the amount of money which we owe them. So in our receipt here, this receipt is coming from our Prima stores, confirming that the amount of money which our farm owed them has already been received. So it will be received from Anesta Farm. Anesta Farm. Being payment of, we had earlier on, we had purchased fertilizer and dairy, which was a total of 6,000. So this one is being payment of 20 bags of dairy milk, 20 bags of dairy milk, and 2 kgs DAP fertilizer. Then we also have the signature from Wakulima stores confirming that they have received that amount of money. So that's all about a receipt. So like we have said, it contains the date of payment, amount which has been paid, goods and services for which the payment is made, the farm's letterhead, the receipt number, and the form in which the payment is made. Then we proceed to the delivery note, number 4. Our financial document number 4, we have the delivery note. So we're going to look at the delivery note. So from the receipt to proceed to delivery note. Delivery note, this is a document, or it's a note which is prepared by a seller to a company who's being delivered to a buyer. It has the following details. So the delivery note has the following details. Number 1, we have date of delivery, whereby our goods, for instance, today is on the 20th, we are on 23rd of June. So we have our date over there. Then number 2, we have quantity of goods delivered. Remember, we are still going to use our previous example. We had DAP fertilizer. So here we have DAP fertilizer. Quantity 50 kgs. Then we have dairy. Dairy. We can have 10 bags. Sorry. So we have this is item number 1. Then we have item 2. So particularly here we have DAP fertilizer, and then here we have our dairy. Then the next item on our delivery note is the means of delivery. How are the items or how are the goods delivered to the farm? So in this case, maybe if the mode of delivery was maybe through a pickup, or it was maybe delivered by a tractor or by a lorry, that one will be indicated. Then we have the recipient of goods. When the goods were delivered to the farm, the person who received the goods, that's the recipient of the goods, and our recipient here is Ernest Victory Farm. Conditions in which goods were delivered. If the goods were delivered in good form, then all that will be indicated in our delivery. And if the goods maybe we had some issues with the good, then that one again will still be indicated on our delivery note. So still on our delivery note, we are going to have the goods were delivered by the person who was in charge in the delivery of the goods. That person, the name will be indicated down there. Then the other person who received, maybe it was the school, the farm bursar, or maybe it was the farm manager. You include the name of the manager over there. Then you have the signature and stamp, meaning that the farm already received the goods. Then we proceed to our last item on our financial documents, which is the purchase order. Purchase order. So our item number 5 under financial documents, we have purchase order. So what is a purchase order? This is a document prepared by a buyer and sent to a seller requesting for the supply of goods or services. A purchase order. This is a document prepared by a buyer and sent to a seller requesting for the supply of goods and services. It has the following details. A purchase order has the following details. Number 1, types of goods which are required. Types of goods which are required. For instance, here we are going to have our dairy meal, and then we are going to have our DAP fertilizer. Number 2, quantity of goods required. If we require 20 kgs of fertilizer, or if we require 50 kgs of dairy milk, so we are going to indicate the quantity over there. So here we have DAP as an example. Then you also have an example of our dairy milk. So quantity of dairy maybe we require 50 kgs per bag. Then you have dairy milk, maybe require 200 kgs. The next item on the purchase order is date within which the goods should be delivered. Date within which the goods should be delivered. So you are going to have our date over here. So it means that if this is our farm and it's a victory farm, so we want to send this purchase order to Wakulima stores requesting for fertilizer and the dairy meal, and we also make sure that the Wakulima stores are able to know whether by which time, by when we require these two items. So maybe we require them by next week, Monday. Maybe we can have any date. Maybe we have 29th of June. That's by the deadline by which we require the goods. So we have the date within which the goods should be delivered. Name of the person who is placing the order. Maybe the name of the farmer. We are going to have the farm manager is the person who is placing the order, and then the signature of the farmer. Authorized by who? This farm manager, maybe he's authorized by the directors of the farm. So maybe it is authorized by the board of directors in the farm. Then you're going to have the signature of the chairman of the board over there. Then we have the purchase order number. We have the purchase order number, which is indicated over there. So that is an example of our purchase order. So this is our farm, which is requesting to be delivered, the delivery of DAP and DNP by this date. And then this is the supplier. We have to be supplied our Prima stores. And this order has been placed by the manager, the signature of the manager, authorized by the board of directors of the farm, and then you have the signature. So just to remind you, a purchase order, like you have said, it is prepared by a buyer and sent to the seller requesting for the supply of goods or services. And then, like you have said, it contains the type of goods required, quantity of goods required, if you have the quantity of goods required, date within which the goods should be delivered, then the name of the person who is placing the order, name of authorizing officer. This purchase order cannot be placed if it has not been authorized. So we must have the authorizing officer, and then you have the purchase order number. That's all for today. So learner, dear learner, in our next lesson we are going to look at books of accounts, which include the ledger, the inventory, the cash book, and then finally we have the journals. So till next time, dear learner, have a good time. Continue revising when you are still at home, and don't forget to sanitize all the time and keep social distance 1 meter. Thank you.